Okay, we're ready to start again. My name is David Hensey, broadcasting from the beautiful Willamette Valley. I want to thank everybody for their attendance today. We're about to start the second session. It's exciting. We want to once again point out our platform sponsor, AgriFinance, for helping make this convention possible. This next session, which is a brewer panel, and its sponsors is F&B Farms. And thank you, F&B, for making this important piece of the annual convention program possible. I think we always love these panels. Today, we're going to start out with a presentation by Bart Watson and Mark Yocum. Bart Watson is the Chief Economist, Brewers Association. He holds a BA from Stanford University and a PhD from the University of California, Berkeley. And Mark Yocum is a technical director in North American Supply, Anheuser-Busch. Mark works in St. Louis for the Anheuser-Busch InBev, where he serves as the North American Technical Director. Mark and his team serve as a technical production support resource for not just brewing operations, but also for ABI's vertically integrated businesses. Also joining us in the panel afterwards, just want to reintroduce Joe Heaton, Director of Federal Affairs. For the Beer Institute, Joe has over 10 years of experience in Capitol Hill as a legislative director and counsel to Congressman Mike Turner, and Deputy Chief of Staff and former Congressman Jim Runyon. He has a Bachelor of Degrees from Miami University and a Juris Doctorate from Penn State University, Dickinson School of Law. And then we had Jim, who gave us a great presentation this morning. Just to reintroduce him, if you didn't hear that, Jim is a senior analyst for Rabobank's research group covering North American beverage sector based in New York. Jim leads the research effort in beer and non-alcoholic beverages in North America, and building on Rabobank's presence in the farm level through the entire value chain, and works with clients on everything from understanding new markets to strategic planning and marketing and our M&A. So we'll start off with the presentations this morning and then move into the panel afterwards. Take it away, guys.
Can everyone see those screen, hopefully? See those?
Looks good.
Shared slide? Excellent. So I'm going to run through kind of a combo of what Chris Swersey would also typically present. So special thanks to him for preparing a bunch of slides as well as my own. And if I talk really fast, then the slides will be available afterwards. But I want to make sure give plenty of time for Mark and for Q&A at the end. So the changing U.S. beer market. Headlines from this, and I'm glad that Jim said similar things, since it would have been awkward to start off with a disagreement. But I would agree with the assessment that Jim just gave, that many of the total beverage alcohol trends that we saw in levels, consumption, premiumization weren't that different. But what we saw in 2020 was a huge channel shift. And, I'm going to go through that and talk about specifically, how that affected craft brewers. But that was a real challenge for craft brewers who rely, much more on the on-premise than the off-premise. And that's going to be even more true for the smallest brewers who were really hit the hardest. Then I'm going to move a little bit to the supply side, which is going to get covered elsewhere, but, really digging into our hop survey and some of the changes we're starting to see in hop usage amongst craft brewers, which I think are interesting and will be important for this group. We saw a big drop in hop usage rate, mostly driven by downstream products. Which meant that brewers are still spending the same amount on hops, but they're using fewer because they're spending a little bit more on value added. And we'll talk a little bit about the turbulent year for the hop market as well. All right, so I want to start with what hasn't changed, and I'll kind of fly through this because I think Jim covered similar trends pretty well. But over the long term, we don't see the percentage of Americans drinking changing that much. There's some signs that might change a little bit with this next generation, that they might interact with beverage alcohol a little bit differently, but generally 2/3 of Americans drink. This has been true since the 1930s, when the top songs, hitting the charts for your grandparents and great-grandparents were, Over the Rainbow, God Bless America, and When the Saints Go Marching In. So a lot of consistency, even in a time when a lot has changed. We can see this more recently within beverage alcohol, that there's a slow and predictable change in total demand over time. And you can predict a vast amount of this variation based on things like what percentage of the population is 21 to 34, how is the economy doing, et cetera. You see it too in spending. Jim showed some of the disaggregated numbers here, but when we aggregate it all together, as a percentage of consumer expenditures, people spend the same amount. And while there's been a lot written in 2020, are we drinking more? Are we drinking less? The cottage industry has popped up in the media talking about this. It really looks like as a country, we're drinking pretty much the same. And that doesn't mean that certain people aren't drinking more or certain people aren't drinking less. But in average, when we look at the tax data, we see that it works out to pretty much the same. So this is data from the TTB. This will get revised, and this is only 3 quarters of 2020, of which 1 quarter was, mostly normal. But you can see that in terms of tax growth, spirits are up 3%, wine is down 1.4%, beer is down 0.3%. If you apply share here, we get tax growth of 0.8%, which is almost exactly the same as our 21 plus population growth right now. So this is a really long-winded way of saying, in terms of total beverage alcohol, we didn't see huge changes in the amount Americans drank, even when faced with, total tumultuous year and a pandemic, which, begs the question of what would it take for Americans to drink more or less. It shows how, kind of steady those trends are. Within this context, beer continues to lose share. Jim showed this over even a longer period than this graph shows. So beer has steadily lost share over time. And to remind you of some of the reasons that beer has lost share, and I presented these last year, but these are with updated data. And here's just another way of looking at it. So this is US beer shipments, a 12-month rolling total. That's last year. The first dot in yellow is last year when I presented. And the yellow dot is this year. So we actually maybe saw a little bit of an increase, though, you never want to read too much into shipments since, they don't always play out into sales. But on a per capita basis, this is going to be another decline in beer sales. And as a reminder of, what's going on here, a big chunk of this is demographics. People tend to drink less beer as they get older. And as Jim also showed, we're getting older as a country. And another big reason here is price, that over time, these are off-premise prices from the BLS, beer has become more expensive relative to wine and spirits. And, that's not to say that all beer has, some beer categories have gone down, but in aggregate, beer relative to wine and spirits has continued to hold or increase pricing. These are real prices, so they control for inflation. But when we look at this compared to the mid-90s, beer is about 5% more expensive than it was when you go into a grocery store, controlling for inflation. And wine and spirits are roughly 15% cheaper. And you don't need to be an economist to know that, people who are price sensitive and view beverage alcohol, somewhat as substitutes for each other, that, when one good is now 20% more expensive relative to where it was, some percentage of people are going to flip. And that's what we've seen. Beer continues to premiumize. I'm going to show some more data on this in a second. And 2021 may actually be the first year where things that are priced above premium, so priced above Bud Light, Miller Lite, Coors Light, are actually a majority of the total beer market. We're getting pretty close to that, and those trends are holding pretty steadily. And that premiumization has continued. Jim showed some data on the top brands and growth. This is a combination of growth and share, because remember, a lot of volume moved into the off-premise last year. And what we see when ranked by price is that the things that took share were, again, still above premium. So even if Bud Light grew last year, within grocery stores, because everything grew, it didn't actually take share. So, we see domestic premium still losing share, domestic sub-premium, losing a similar amount of share. And the things that gained or held share were all priced above that. So beer continues to trend up. Flavored malt beverages there is driven heavily by seltzer, which Jim talked about at length, which should be a little bit worrisome for hop growers, as we see, a big chunk of the beer market that's not heavily hopped, but has some hops in domestic premium and sub-premium, essentially swapping out that share for seltzer, which, I think they throw one hop into Truly, but, essentially are not hopped. All right, so that's what didn't change. We didn't see any change in the overall trends. But what has changed is a huge channel shift. So we saw a lot of volume that was in the on-premise disappear overnight. And while it's steadily come back, it's not fully back. And that volume flowed into the off-premise. So it flowed into grocery stores, convenience stores, and other packaged opportunities. You can see this is credit card data, kind of a graph of the year as it played out. This hits small brewers much harder than it hits the overall beer market. So here's a really simplistic breakdown of the channel mix for all beer versus craft. All beer is there on the left, where less than 20% of all beer's volume, not dollars, but volume, flows through the on-premise. So it's been about 18% in recent years. For craft, it's closer to 40%, maybe a little bit higher. It's a little hard to get precise numbers here, but our estimate is around 40% of craft volume is either at the brewery or sold through bars and restaurants. And that means that if you get one channel that's 10 or 15% up and another channel that's 50% down, you're going to see very different overall numbers for beer versus for small brewers for craft. Here's an example of this for overall craft and even then the smallest brewers. So this is from our Q3 survey where we asked brewers what their trends were by distributed draft, by package, and then at the brewery. And I've taken the same growth rates and I've applied them to the overall craft industry, so including regional craft players like Sierra Nevada or Boston Beer that have a bigger distributed footprint. And then looking at the smallest breweries who are very, very heavily draft or at the brewery. And you can see that even given the same growth rates here within craft, the smallest brewers are getting hit the hardest. So in Q3, we estimated overall craft was down 5%. This is a time when overall beer was probably static, if not slightly up. Overall beer, I think most estimates are it's going to be down maybe about a half point for the full year when we get the final data. We'll see. And the smallest brewers at this point in time were down almost 30%. So the general rule of thumb here is the smaller you get, the worse the growth trends are this year because of that reliance on draft and the on-premise. We're seeing that play out in our production survey. This is always the first sneak peek I give at what we've seen in our production survey. And when I compiled this on Friday, we were up to about 1,200 responses. We've got about 1,500 now, looking at my inbox this morning, with about 7 million barrels of production submitted. To give you a marker, last year we had about 26 million barrels of craft production. So we're getting to a sizable chunk of our total set now. And that sample so far is running -8%. So I've been pretty consistent in recent months in saying I think we're going to end up -7%, -8%. There may be some early response bias in these numbers because the long tail that I'm seeing in our survey is only doing -7%, -8%, and I think they're going to finish lower than that in minus double digits. But a lot of the regionals haven't come in too. So, when we get the companies that have a bigger package volume coming in, that'll offset some of that. So I'm still predicting that the craft industry is going to finish -7% to -8% this year, which, that's a big change. So this is, year over year percentage volume change. We weren't in the world of 18% growth anymore. But, we were still hanging around at 3-4% growth. So this is going to be the first year since the Brewers Association has tracked this data that small brewers end up collectively with a negative volume. So, very, very different times we are living in. This drop has not necessarily, though, dulled the number of breweries, at least yet. So we're still going to see the brewery number increase in 2020. Openings are going to outpace closings. We'll see if that holds in 2021. But in 2020, we still saw the brewery number climb. I always like showing this in per capita too, to remind people that, yes, we have far more breweries than ever before, but we're returning to an era where we had about 3 breweries for every 100,000 people. This is in total pop, not 21 plus, because the legal drinking age has changed over these time periods. Here's the animation that I like to show too of the last 20 years of breweries opening. I'll give a 30-second pause here in the middle of the presentation to watch this. So from that, you can really see the explosion in breweries we've had in the last 5 years. And, one thing I think we did see change in 2020 is that boom in breweries may be ending. And right now we're expecting about 700 openings in 2020 when we finish our numbers. That may seem like a lot still, but remember, a lot of those breweries were still in planning prior to COVID, or, had even gotten far enough down that, they had put down money, they had bought tanks. So they were far enough down the pipeline that not opening really wasn't an option. That's about 25 to 30% below last year. And what I would also add here is when we look at this over kind of a longer term period, we see that this decline in openings had already started. COVID, I think, has accelerated it. So some percentage of that decline is due to COVID, but brewing numbers were dropping and were likely going to drop regardless of whether COVID had happened or not. So this era of 1,000 plus breweries opening a year, we may not go back to that anytime soon. On the flip side, one of the most perplexing numbers this year for me has been that we haven't seen closings go up. If anything, closings have actually gone slightly down. So here's a similar 365-day rolling closing number. And you can see about the time COVID hit, closings actually started to decline. And I don't have a great explanation for this other than extreme cost cutting, PPP loan money, and breweries that were struggling, maybe convincing themselves that things will get better after COVID. And so trying to hold on a little bit longer, maybe landlords are forgiving more rent than they would be otherwise in a normal year. But so far, we actually haven't seen the closing number go up that much. And I do think that maybe will change in 2021 as breweries see what the recovery looks like and realize how big a hole that they've dug in their finances. But so far, the biggest change has been the opening number, not in the closing number. Again, I think something has to give here next year. We're going to enter into the biggest, tough part of the year for breweries anyway with winter. We've seen in general small brewery confidence declining. So that may change in 2021. And, hopefully when I give this presentation next year, I won't be reporting on more closings, but I do think that that's a distinct possibility. All right, so that's kind of the super brief version of what I would typically do. And now I want to spend 10, 15 minutes going through the stuff that Chris normally would. First, I want to just say that hoppy beers are still growing. I know there's a ton going on with this slide, so I'm going to try to break it down really simply. This is all the styles in craft, in off-premise data and measured scan. I've highlighted obviously the hoppy styles in green there. If it's higher up, that means that it is gaining share within craft. And if it's further to the right, that means it's gaining share faster than it was last year. And if it's further to the left, it means it's gaining share slower. So what we see within IPA is that IPA is decelerating a little bit, partly just because it's gotten so big and it's hard for it to take share at quite the same rate that it was. But it's still holding, if not growing share. So American IPA is holding share. New England or hazy IPAs are still taking share very, very strongly. And overall, IPA is still really the growth engine of craft overall. Without IPA, we wouldn't really be seeing any growth in measured scan. And this year we did see pretty strong growth, if not, even though we didn't see overall share growth because everything went up in off-premise. Here are my estimates of IPA, both share by channel and then within overall beer. You'll notice there's kind of a disconnect this year. So IPA continued to take share within IPA. It's up to almost within craft, it's up to almost 40% of craft sales, drawing a line around IPA that's pretty broad. But it probably lost share in total beer because A, craft declined, and because B, IPA tends to do much better on premise as it turns of share. So losing all of that bar and restaurant volume hurt IPA. So my estimates are that IPA gained within craft, but is going to lose a little bit of share in overall beer. And I think, similar to what Jim was talking about, that we'll see that, trend go back to normal with IPA taking that share back as the on-premise returns to normal. All right, so moving on to the Brewers Association Hop Survey, just kind of rules of the road. This is the annual survey we do in July and August. We've now got 13 years of data on this. It's always looking back. So the 2020 survey looks at 2019. So we're really going to see the effects of COVID in next year's survey more than in this survey. And thanks to the sponsors of that survey, Tributary Hop Farms and Chula Vista Brewery for helping make that possible. To winners of the Cascade Cup next year. Looking forward to seeing that announced this year. And the headline of the hop survey this year, I think, is the hop usage rate declining. So we saw, and the sample changes a little bit year over year. So there's some error bars on this. But regardless of how you cut it, it's pretty clear that hop usage went down on a per brewer and per barrel basis last year. And I'll get into some of the reasons for this, but a lot of this is going to be because people move to more efficient downstream products. Hop consumption level was probably about the same, given that offset to the increase in IPA in 2019 and brewery production. U.S. varieties still dominates. We saw the variety number go down a little bit. Again, some of that might be who got surveyed. And I'll run through the rest of these. So here's the average hopping rate, pounds per barrel. You can see a pretty big decrease back to a level, in between 2015 and 2016. That's a significant, hopping change, even in a year where IPA gained share. And what we saw here is that respondents are using downstream products more. So I think this is the biggest explanation for why we see this drop. That and there might also be some conversion issues here. We ask people, we have a conversion rate that we're using, but if that's not precisely right for a cryo hop product or something like that, that might skew these numbers, and it gets a little bit harder to narrow in on what's that actual pounds per barrel when we have more and more of these non-cone products or non-pelletized products in the mix. But you can see a huge jump there in downstream products. 53% of respondents say they're using downstream products, and I really think there was a stigma around some of these from some brewers before that's really going away, and we're seeing brewers really just turn to what they think will help them make the most flavorful kind of hop forward flavored beers. Overall consumption, we measured pretty static. So again, remember this is a 2019 production year, so we have a big increase in production, IPA share shift, but then offset by that lower hopping rate from downstream products. And interesting that even with that lower usage, that the aggregate hop cost per barrel still went up slightly. So even with lower usage, brewers were paying equal, if not more, for hops. This is both a shift toward more expensive varieties, but also, that those downstream products, they may be efficient. They may allow brewers to, get better yields, but they're not always cheap. So that's part of it as well. Swarzy has drawn me an arrow. Thank you. So we did see that slow a little bit. And I think that's, the per barrel rate dropping. The percentage of imported hops used held pretty constant. We've seen this generally declining over time as U.S. brewers move even more and more to U.S. aroma varieties. But you can see pretty similar in 2020 to 2019. And the total number of varieties used dropped, I won't say sharply, but we did see a drop for the first time since 2016. And mileage may vary. If we had gotten a brewer in here who does some different stuff, we might have seen that hold a little bit higher. As always, most of the volume is coming from 25, 30 of these hops. So I wouldn't worry too much about that kind of long tail. Top 3 impact varieties volume share, though, declined. So it's interesting to see both of these, that we saw fewer hops, but the top 3 impact varieties volume share also dropping. So we're really seeing kind of the middle of the hop usage build out, where brewers aren't dominant using a few hops, and weren't using as many hops, but we're using kind of a greater share of hops in the middle of the distribution. And top 10 also declined. So again, that long tail maybe got a little bit shorter, but it got a little bit fatter, if that makes sense. Variety impact range, year over year, fast movers. So these are hops that became more important to craft brewers. Some familiar names in there: Sabro, Strata, Cashmere. Good to see, interesting to see a public hop in Cashmere. They're growing. All right. And finally, just to kind of wrap all this up with my last few minutes, wanted to do kind of a little bit on hop harvest, hop supply, and kind of a wrap up, putting that demand and that supply piece together. So, these are numbers that I'm sure everyone on this is already familiar with, but to run through them once, this was a unique year in a lot of ways, where we saw acreage increase, but yield decrease so sharply due to, early single stringing, growers recognizing that 2020 was going to be a different year early enough in the crop cycle to single string fields. But then also, crop damage from Labor Day wind and sandstorm, particularly in Washington, which meant that even with that acreage increase of almost 4%, we saw production decrease 7%. Crop values were up in Idaho and Oregon, but decreased sharply in Washington. And while, it's always bad to see a, player in our industry get hit, you never want to see growers see those values go down or, lose money. This overall decrease in production may be a blessing in disguise, simply because we saw such a sharp drop in production as well that this may keep us more in balance than we would have been, and long term protect value for everyone. To show how unique a year this is another animation of acres by state and then harvest by state. And you can see that generally these lines are moving together until we're going to get to 2020, which is a very unique year where you see, Washington still going up in acres, but then dropping in production. And if you watch this, kind of watch it through a second time, you can see how unique that is, that these dots almost always move in tandem with each other. So acres and production go in tandem, and rarely do we get a yield shift that's big enough to offset that change in acres. But if 2020 was nothing, it was a very unique year in a lot of ways. All right. 2020 hop stocks data, published by USDA. You can see that, we continue to see those hop stocks increasing as production has gone up. And some of this is a healthy increase as simply, growers and dealers hold more as we get to a bigger crop and a bigger usage. We want to be carrying out enough that if there is, challenges in the next crop, that we have a buffer. But we've continued to watch this over time, how much of the stock has moved to dealers. And, I'm not going to say kind of when do we hit a worrisome level, but it is, interesting to see how much more, that net inventory has, moved toward dealers over time. And I think, starting to show signs, that maybe we're, I don't know the best way to put this, and I appreciate people's Q&A here to maybe flesh out this idea. But there's a lot of inventory being held with dealers, and I think it's an open question of kind of when is enough, when do we have enough? One good sign we did see in the hop survey that I wanted to put at the end here as kind of end on a more positive note is that craft brewer contracting did go back up. I think, we often talk in kind of grand, do we have enough hops? But, one thing I think brewers are sensitive to is the specific varieties. And this year is certainly going to be true there where, we certainly have enough hops overall, but there's going to be varieties that are in real shortage because of, the specific damage to the crop. I think Azaka is a great example looking through the hop report of, acreage went up pretty sharply, but total pounds are down. And that's going to create challenges. And I think brewers are recognizing this and contracting more and more for, things that they need to have, that they really need to send that signal to growers and dealers. And so that's good to see. And then, kind of final two slides, export growth paused in 2020, looking at the data. This is in value in dollar terms, not in volume. Interesting to see that a lot of that was in extracts, which, the export market for extract is, not necessarily those, I think it's growing to be those sophisticated products, but, on a value level, a lot of it is just, alpha. But the total hop, exports value stayed pretty constant, so that didn't decline. And then to kind of close and put this all together, I actually think we're going to end up in a place in 2020 where the gap between production and usage in the U.S. might actually be smaller than last year. So I'm going to predict, economists don't always like to predict, but I'm going to predict that when we see that, that March, stocks number, that we're going to see it rise, but we're going to see it rise, not as sharply as we did last year, because given decreased production and usage, I think we're actually going to see a gap that's a little bit smaller. And I'm happy to go into this model or share some of the details for anyone who's curious. So I think I hit the time I was trying to pretty well there. And without further ado, I will pause and turn to Mark.
We had a couple questions.
Oh, great. Yeah, I don't know if we want to do them now or if we want to save them all for the panel. I'll leave it up to you.
Yeah, well, I think just really quick, one of your slides was showing the circles, which represented beer styles in relation to overall year of year. Was that craft beer only or all beer?
That was craft beer only. That's a good clarification question. Yeah, that was craft beer only. So it would look different if we had all beer there.
And then just really quickly on the downstream product usage, is that adjusted for how many pounds of raw hops are required to make?
We're trying to, but that's a challenge. So we are trying to adjust for that. So yeah, understand, when you're using some of these products, you're only using a pound of it, but that's 6 pounds worth of raw hops. So we are trying to adjust there, and that might be some of the decrease we're seeing. But talking to brewers and digging into that number a little bit, they do feel that they can be more efficient with that. So the equivalent of 6 pounds of hops in a downstream product can produce stronger hoppy flavors than those, same 6 pounds in pellets if the brewer's using it right at the right time in the brewing process. So some of that decrease might be just, it's hard to get those adjustment numbers perfectly right. And some of it, I think, is just different usage. But yes, we do convert for what we think the raw hop usage is that goes into those products.
Okay. Thanks a lot. Just clarification on those, and now we can move to Mark.
Great.
Just to do a quick sound check, can you guys hear me okay?
Yes.
Perfect. All right. And hopefully it looks like it's up on the screen. So good morning, everybody. Appreciate the opportunity to get to talk to you. Greetings from St. Louis, Missouri. Like everyone else, I wish we were together sharing some beverages, but we'll get through this as best we can. My talk here is going to be pretty brief. Just wanted to give a little bit of an overview of AB's take on kind of where we're at right now, and really save plenty of time for the Q&A, which we all know is the most important piece. Jumping right in, a couple things, just a couple of the AV thoughts on certainly hops in the industry. I don't think anything that I'm going to touch on today is anybody's going to find surprising. I'm going to echo a lot of the same thoughts, which I think I take some comfort in, that both Bart's messages as well as Jim's earlier today, and even if we go to yesterday's on the industry and some of the government side, we're all kind of in the same boat. And I think it's important to recognize that. And I think through combined effort, we're all going to get through this. We'll talk a little bit about some of the challenges and some ideas. I'm going to talk, kind of take you back in time to 3 years ago when I was on stage and spoke a little bit about the AB philosophy on hops and how we approach the industry. And going to update some of those rules a little bit, and then talk a little bit about where we're going next and some things, some of our continued defined commitments on where we're at and trying to continue to lead change. A little bit about me. David already covered this, so it'll be in the presentation. Shameless picture in my backyard, but been around the industry, been making beer for about 28 years, and 26 of it, just north of 26 of it with AB, and pretty passionate about beer. No surprises, obviously. We all know this, otherwise we wouldn't be having this meeting. Hops are kind of a big deal, certainly become kind of the sexier, fun ingredient in the process in the last 15 or so years. And certainly without great hops, we're not going to make great beer. No surprises here. And I think it's just important every now and then to take a step back and appreciate what we've got, appreciate what got us to where we're at, and make sure that we all recognize, certainly from an AB position globally, hops are always going to matter. So I know that should go without saying, but I think at times like this, certainly COVID has taught us you do have to take a step back and kind of take stock of where you're at. And are hops important? Of course they're important. They're critical. We can't make good beer without them. And so I'm just reinforcing kind of the obvious, but I think it's an important thing to make sure we keep telling ourselves. Just like everybody else, we've all been challenged in ways in the past year that we never imagined. We don't have a crystal ball any better than anybody else. But what we do know is that when we are faced with crisis, whether it's an economic crisis, whether it's a pandemic, whether it's an ingredient shortage, whether it's a process issue, you have to fall back on the things that you trust and know. And in our case, it was really to trust our process and be willing to learn from mistakes, to be able to pivot quickly and learn those mistakes fast. And then in taking that step back, what are our strengths? What's the strengths within the industry? How can we continue to double down and contribute to those strengths to bolster them even further? And being very critical to look at what gaps we do have. Certainly all of us, I think, had different gaps in our process or our preparedness for something like we're facing that we never envisioned that we would be dealing with. And so as we embrace those gaps, we have to start thinking about, well, what are our challenges? And how quickly can we adjust? If we look at all of us, we're kind of in the same boat, right? We've heard all the same kind of topics of consumer trends, the shift towards seltzers, the shift towards different or alternative beverages, beer volumes continuing to fall. What's going on from a market and environmental change and consumer choices in that regard? How are people spending their money? How often are they spending it? Where are they spending it? And of course, in the hop business, as a farmer, we have to understand what's going on from the agricultural side, overall performance, leveraging technology, rain and wind and disease and pests. So all of that. Well, that's when you step back and take a look at what your strengths are and make sure you're embracing your gaps. So in our position, we're a little unique in that not only are we able to be a global brewer, but we're also a global farmer, having operations in 4 different parts of the world, and understanding our role as an industry member and embracing that role, not only of that of leadership, but also to try to make sure that we're sharing knowledge that's out there, and we're making sure that it's very evident that we have this culture of quality that transcends decades as a brewer, as a farmer, certainly as an industry member, to continue to focus on reinforcing things like research, supporting HGA and HRC, supporting our merchants, supporting brewers in the industry, not just our own, and suppliers and farmers. So when we look at most of our situation, I'm a guy who tends to like history and love quotes. And though it was not exactly worded this way, Winston Churchill's credited with "never let a good crisis go to waste." And I think a better way that it gets put is seeing that everything we've been confronted with in the industry in the last 9 months to 12 months is really about understanding what opportunity it presents itself rather than the difficulty that is presented. How do we leverage technology differently? How do we use information? Just what we're doing with this conference alone, and how we can better connect with people. We've all understood that need, that human connection, and the fact that we have, as a beer industry, we have the most socially accepted product that's out there that really binds people together. How do we continue to leverage that? I can't tell you how many Zoom happy hours I've been on, and 12 months ago, I wouldn't have a concept on what that even was. So making sure that we're open to these shifts in our situation and that we're adapting to those at the right pace. It's easy to begin to double down and triple down on areas that immediately emerge as a gap, but we have to make sure that you do have that willingness to learn, incorporate those learnings, and then focus on the most critical crisis management 101 piece. And this is where we began to tailor our steps internally. Is the most important piece now is, what are we going to do next? This is one example, maybe a little bit of a shameless plug, but I think it's an important piece to recognize that some of that shift to what you do next isn't about dollars and cents, isn't about growing the segment, but being visible in the segment, to be part of a community that's larger at times than just the beer community. And all of us kind of share that sentiment. And so this was, an ability to leverage our scale for certainly, and leverage our capabilities, and begin to share back and say, hey, everybody's in the same boat, and we know we're all going to come out of this, but we want to contribute and help get us through this. So just sharing some general information on that. Now, if we go back in time, 3 years ago, when I stood on the stage and I talked about these 6 rules and how we kind of managed the hop situation at AB, and we approached these 6 rules, and some of it was meant to have some fun, kind of poking fun at ourselves a little bit. When we look at those 6 rules, what we do is we start with the simplest one. Don't fall in love with something you can't have. This is an internal discipline statement. Comes from our former vice president. Many of you in the industry know Jane Killebrew, who recently retired, but Jane used to use this phrase with us all the time, whether it was process related, whether it was technology related. And we've adopted it, certainly going back to about 2011, is don't fall in love with something you can't have. I can have the coolest, sexiest, most amazing flavor hop, but if it doesn't grow well, no farmer's going to want it. If it doesn't process well, no one's going to want to deal with it. And so if it's only available once, it's not sustainable. It may be super special, but don't fall in love with it. And what I would tell you is, I think as we look at these rules, and I'm going to touch on them in a bit, not to delve into too much history because of my age on Stephen Stills, but I think we've shifted a little bit and said, we're not walking away from don't love what you can't have. I think it's important to sometimes, again, take a step back and look at what resources we do have. In the case of hop varieties, what are the ones that we do have in our arsenal? How can we be more creative with our own process? And so just to revisit, here's what those 6 rules look like back in 2018, as we talked about it. Don't fall in love with what you can't have. Sometimes a brewer's got to admit that it isn't the ingredients. It might be their process. They're in more control than they think. Money will never buy you happiness. You cannot throw money at all problems. Certainly in the ag business, no matter how much money I throw at the ground, the hop's not going to respond to that cash flow. So you've got to have really a plan, and you have to follow it. If you don't have a plan, I guess any road will get you there. But if you do take the time to formulate a plan, you have to follow it. And I think we'll touch on in a second of how that relates to what we're trying to do going forward. You have to be willing to learn. You're going to make mistakes. We don't know everything, and we have to be open to where we're going to learn from. And this last one, I think, is particularly important when we look at some of the support entities that are out there. And I'll talk in a little bit about the HRC. Something near and dear to me is you go to the gym when you're healthy, not when you're sick. And I think the hop industry has had an enormous amount of good years in the last several. And I think it's important to recognize that a lot of people have reinvested, and that's an important piece. So when we look at these challenges and how we adapt them, as I said, you don't have to focus on just what you can't have. Challenge of loving what you do have, and how do you embrace that? How do you use the resources that we've got? Those ingredients that we have, our process is just as important. Our people are just as important. Really, what your assets are. My challenge to the group is, as we've dealt with COVID, as we deal with an upcoming crop here for 2021, have we challenged ourselves enough? Are we being a better brewer? Are we being a better farmer? Are we challenging ourselves with resources and sustainability, cost effectiveness, and being able to reinvest in our process? Have we focused on the right research, et cetera, et cetera? Now, I said money can't fix all your problems, but if you're rethinking, say, your farming practices or your application regimens, how efficient are you? That money that you save or that money that you rethink, you can then reinvest into different parts of your process. Where can you expand? What new research do we need to get into? Are there new markets we need to explore? Have a plan, and of course, challenge yourself to follow it, especially when you get shoved with something like a pandemic or a bad harvest, or a couple years ago with voles. All kinds of things can begin to force us to pivot, and that's actually when you have to resort back to your process. Make sure you've got a plan and you're disciplined enough to follow it. Be willing to learn. Challenge yourself to be willing to admit when you're wrong and incorporate your learnings. Sounds like a no-brainer. The thing we tell our children all the time. It's okay to admit you made a mistake. What's important is what you do next. And now more than ever, that's certainly something internally that we continue to talk about. How do we get smarter at what we're doing? And then getting healthier when you're healthy, really that's about just never being satisfied. And I'll touch on a piece with that here in just a second. So how do we meet these challenges? Okay, you can have these cute little 6 rules and you can make some amendments to it. Well, in our case, to speak specifically from an AB standpoint, I'll touch on a couple of key aspects. You know, going back to 2011, internally we have a process known as Project Wolf. And, you know, I don't need you to try to absorb the graph. It's just a graphical representation of really a 10-year plan. Every time we're dealing with a hop variety, every time we're dealing with a process, we're looking at a 10-year process internally, even though the hop may already have 3 or 4 or 5 years from an experimental line, for example. I'm only highlighting this to really point out that you have to have that plan. And in our case, in AB's case, we're feeding the pipeline for a global company, you know, in using upwards of 40 million pounds of hops on an annual basis. So we have to make sure that we're heavily involved with researching different varieties that are out there, that we're supporting entities like the Hop Research Council to support programs that are out there like Good Binds and HGA. And we also have to leverage our ability to have brewery volume and diversity with both our small brewers and our larger breweries. We're able to leverage that to be able to give some light to some of the experimental varieties that can develop. It's not just about money too. It's easy to think about the money being a donation piece or supporting things. It's actually way more impactful, I think, when we talk about actions, and I'll highlight a couple of actions and responsibility and leadership positions because then everybody can benefit from those axioms. It's not just limited to us. When we look at what we've tried to do on leveraging resources that are out there, so that's a little bit about the internal side. Now, how do we leverage things like HGA and HRC and varietal development? Well, if you look at the partnership between HGA and HRC, and we're very much an active player in both of those realms, you're looking at upwards of $3 million on an annual basis between those two organizations that really have led to support from USDA and pumping money back into our industry. And I don't think that's often recognized. Certainly, I'm biased from an HRC standpoint because I sit on that council. But I think it's important that, just like Joe Heaton talked about yesterday, that's the same type of unified industry message. This is not an AB message, but an industry message coming forward and talking about dietary guidelines and the craft beer Tax Reform Act, and understanding where all of those things can play in, whether it's a tariff discussion on aluminum or whether it's trying to fight for restaurants. We're all in that boat together, and I think it's important, even when we look at varietal development, in the last couple of years, if I just look at last year alone, from an AB speaking personally, on an annual basis, last year we bought well over 1 million pounds of experimental varieties from the private companies. We bought well over 1 million pounds of hops just for the U.S. of a couple of the most recent public varieties, that being Tahoma and Rainier. So I think it's important that we recognize what all of us can collectively contribute, all of the benefits of this, and then hopefully represent how we can begin to embrace some of these new challenges. But I think we're in a good position. I don't feel like that everything is certainly doom and gloom. I think COVID is forcing us all to redefine what we can do. And I think so if we go back and look at what every one of us as part of this conference can do is focus on some key opportunities that are out there. Things like sustainability. Water pressure is not going away. Environmental needs are not going to disappear. They're going to get more stringent. What we've seen from an MRL standpoint across Europe and the great work that Ann leads, that's not going away. Managing your cost and operating, delivering savings and reinvesting back into your process, understanding and acting responsible and anticipating those needs. And I put anticipating twice. You do need to challenge yourself and keep asking, how do I anticipate more? And, we don't have a crystal ball any better than anyone else, but you have to continue to challenge yourself. And then how we begin to lead future growth is, what are the research opportunities that are out there that we haven't tapped into? Hopefully people have gone out and looked at the great work that the researchers have done. I think one of the investments in kind of echoing that piece about reinvesting, going to the gym when you're healthy, some of the things I can speak to from an HRC standpoint is improving our operation and bringing a more professional approach over the last 5 years. It's some of the best research I think we've ever seen, and continuing to challenge ourselves of where can we go. The addition of two powerful industry people in Brian and Judy Thote as executive director and technical director, I think we're reaping that benefit from making that investment and that commitment starting down that path 4 years ago. And where else can we go? Health and wellness, transparency of our products. As you listen to Jim, and consumers are changing these health and beneficial products that are out there, whether the beer industry can leverage that or not. Certainly you can't make a health claim on an alcoholic product, but how else can hops position itself? Maybe we need to be focusing research into areas into holistic or more flavor and food-based products where we can start to tout things like xanthohumols and different antioxidant attributes. So I think it's important for the hop industry to understand that it's now more than ever time to really explore what else we can do. To speak firsthand again for AB, I think we're going to continue to support research. We're trying to double down on where that sits. I've mentioned the HRC quite a bit, again, near and dear to my heart. And I think it's important, as Dr. Henning mentioned, some of the public varieties that come out of the HRC support and the USDA funding needs to be marketed better. We've got to get that out to our brewers and make sure that they can do some great things. It's great if AB's buying 1 million pounds of Tahoma and Rainier a year, but that isn't enough, and we need more exposure. it's leveraging some of our resources. What you see here is a before and after picture of the OSU picker, and trying to support research. The WSU picker, that we donated a number of years ago, and it's making sure we're continuing to give back. It's not just a one and done deal, and rebuilding these, because everybody benefits for these. This is not an AB focus. This is an industry focus. It's supporting those new varieties that are out there, as I've talked about, making sure that both the private and the public are being focused on and supporting those efforts, whether it's through the use of our own farms or our own brewers support network. It's supporting sustainability. The slide you have up here is an internal document, but really what I want to highlight is smart agriculture on the bottom is one of our cores, or one of the 5 fundamentals. Water stewardship, which is really about that sustainability message. Circular packaging and climate action and smart drinking all go with this, but this is our commitment to the industry, our commitment really to the world and our consumers, that these are our core strengths, and this is what we have to continue to work on. And then lastly, making sure that everybody knows we're here for the long haul, and we're here to support the industry, whether it's building fun applications that everybody can go. If you haven't gone to the Hoppy app, it's a fun trivia game that we help support and push out there. It's in the public domain. It's not an AB thing, but something that's fun to use is go out and encourage people to learn about beer, and make sure that people understand that we are here for the long haul. We're committed to the industry. We're committed to our brewers, our farmers, our processors, our researchers. And ultimately, I think together we're up for the challenge. And that's, I guess, how I'll end this today is, do we all accept this challenge of how we continue to refine and get better? And certainly AB's up for that challenge. And with that, I'll wrap up and open up for Q&A.
Thanks, Mark. That's a great message, to accept the challenge. And I'm sure that a lot of the questions we're going to get for this panel will be around this. Just to remind everyone, there's on the bottom of your screen, or wherever you have it in your screen, there's a chat button and a Q&A button. And the Q&A button, you can post your questions, and then the chat button, if you've got any technical difficulties, we'll answer them there. But you also, if you have general commentary, you can do that too. So we can get everybody back on. If there's any specific questions for Mark, we can also answer those.
David, I've got a question while we wait for questions to come in the Q&A box. A question for the panel. Marketing professionals spend a lot of time and energy and money trying to change people's habits to kind of influence their buying and purchasing habits. We've developed a lot of new habits during COVID. So can you all speak to how maybe people cooking at home more, or just things that we've been doing differently, how that translates into differences in the future once we're out of this, and what that means for this audience?
I'll go ahead and jump in with a couple of quick thoughts. Yeah, of course, it's interesting, Jackie, that when you mentioned the food piece, I immediately gravitated to that one. We've done some partnership work, first at a grassroots level of building baking kits and supporting that from a beer standpoint and encouraging that type of behavior. We did that in partnership with some work we had done with the American Red Cross, and using that from a giveaway standpoint, getting the message out there that partnering with home cooking, I think it is very much going to change the way people behave. Going to virtual tastings and education has been another powerful tool. So we're hosting different types of beer segments and pushing them out there and encouraging people to go and try to participate from a consumption standpoint. But, again, we talked about what beer can't do versus wine as of right now because of state control. We've absolutely had to pivot internally, and it's changing everything from packaging type and exploring different packaging options to what are the marketing messages and how you can link this together, or also with food companies and retail. So being more visible and changing. I think most of us walked into grocery stores and saw all of a sudden, a lot of the alcohol was moved up front. I saw that certainly on a first-hand basis of wine and spirits, and beer was almost moved as they kind of channel you through different retail accounts. So how do we embrace some of those opportunities and be prepared for it? So yeah, internally, we're absolutely looking at those items.
One thing I'll talk about is in terms of e-commerce, and there are two parts. One tied to food. So we're seeing, if people are cooking at home, but even so, if people are ordering food in more, there are now relaxed regulations, so you can get alcohol shipped. Sometimes, from your takeout, you can get that as well. So we're seeing a big buildup in what a lot of distributors are the ones that handle this directly. But building out, really sophisticated plans on how restaurants can market alcoholic beverages with their takeout orders, and which is becoming a fairly interesting channel. And especially wine and spirits, designing new products around that. Beer is probably already easier single serve, but perhaps less penetrated into that kind of restaurant with dinner channel. And then subscription services are fairly interesting. So if you're thinking about someone at home might be able to now sign up for their breweries, like, a monthly, shipment of beer. And what those are for breweries is a way that really didn't exist to cultivate a deep relationship with a small number of customers. This isn't going to be like a main sales channel, but it's also a way for them to try out lots of new beers, right? So everything, this is obviously something you do in a tap room, but if you can do this specifically with some of your most dedicated fans, and this may be where you try out new hop combinations and new flavor profiles, and you get a lot more direct feedback from people who are really big fans of your beer. So it becomes a little bit of sales, but a lot of developing deep relationships with core customers and being able to experiment.
I'll jump in to piggyback on what Jim was saying, that I think you can think about this not just with consumers, but also with producers and also with regulations, that this has been a time where a lot of people have tried new things, new ways of buying stuff, both food and beverage, alcohol, and I think it's going to put wind in the sails of things that were trending that way anyway. So this is going to accelerate e-commerce. Some percentage of the people who tried it are going to stick with it, but then also on the producer and retailer side, this led to investments for the first time that are going to have self-perpetuating qualities. Now that there are better platforms to buy beverage alcohol, people are going to use them, which is going to lead those retailers to invest in them. Similar on the brewer side, somebody asked in Jim's about DTC. DTC was not something that many brewers had considered or invested in. Now many of them have and are looking to change those laws, and we're going to see the introduction of bills to make some of the flexibilities they've had permanent, and other ones to look to do it. We saw, and this isn't just on producer side, but retailer side as well. We saw in Colorado just the introduction of a new bill this week where restaurants can sell cocktails and beer, wine, spirits to go, and they want to keep that right. So this is going to put, I think, extra momentum behind trends like e-commerce, like being able to buy beverage alcohol more places, that was going to occur anyway. And a lot of people are going to go back to the way they were doing stuff before, but I think we're going to see an outcome that ends up in between where we were and where we are now.
Great. We have a couple of questions. Is ABI considering reestablishing the berry program?
Yeah, so a question is from Sean. I might need a little bit more info from you, Sean, and feel free to reach out me directly. But the berry, which really, for those that don't know, stands for Bush Agricultural Resource Incorporated. Really, berry hasn't gone away. Berry has changed different shapes and size and some of its function, but berry is still underneath Anheuser-Busch InBev from an umbrella. It's run by David Maxwell, 30-year veteran of the industry. And so berry is very much around. Elk Mountain Farms, all of our malt operation, our rice operation, all that still falls underneath berry. So that still exists. I'm not sure if that was the intent of the question, but feel free to reach out to me directly. It's still out there.
Okay. Then I'll drop down to this one with wellness in mind. That AB has an organic brand extension of Michelob that has done really well. Thoughts on the future of organic alcohol, beer specifically, offerings? Is this a niche going forward, or do you think it'll be mainstream?
Yeah, that's a good question. Again, this part of this falls into the crystal ball piece of how much organic is going to continue to grow. We want to understand the segment and we want to understand the consumer trends behind it. We've made organic beers now for a number of years. Michelob Pure Gold being our first kind of nationwide distributed one on a larger scale, and it's taught us a lot. And I think that's the piece that is the important aspect. Organic raises a lot of questions. It raises a lot of farming questions. And I think every hop farmer I've talked to that has put in organic acreage always echoes the same thing. It may have been a pain in the ass to do, but it made them a better farmer. And it taught them practices that they could then apply to their traditional crops that made them better or made them more efficient or made them more knowledgeable. And I think I would say from a market standpoint, the same is true of having products in there. I don't think organic's going away anytime soon. I think it's going to continue to shift and pivot a little bit based on sustainability and water usage aspects. And we certainly want to be in that because we're learning as we go. So it's niche for now, and I think it's got the potential to grow. But more importantly, we're learning.
I think it does have the potential to grow. I'd say organic is super small in beer and a fair bit bigger in a number of other beverage categories. Thinking about coffee, for example, organic is a fairly big, certification there, as are a number of kind of fair trade, Rainforest Alliance type certifications. But we've actually seen consumers moving against them slightly, over the last couple of years. And I think, I think there's a limit to how big organic can get. And so beer might be on the underside of it, saying, there are a number of consumers who do really identify with that. But I think consumers are, what we see more in coffee would be a move to transparency, right? So do we understand who the farmer is and, how you treat the farmer and what that connection is and understand more of the supply chain or simpler issues, just like, is this fresh, is this local? And I think, on a broad basis, anything you're doing that's giving more transparency, and organic gives you a little bit more transparency into the process and has a little bit of a health signifier is certainly a positive in the short term.
Okay. Here's a question it says for Mark or Bart, but I think we can open it up to everybody. Is there any insight into the factors contributing to the decline in the proportion of hop acreage dedicated to public varieties?
Mark, you want to start, or should I jump in?
Go ahead, fire away.
I mean, we could list a bunch here. It's a combination of, lack of investments, mismanagement on the public side, and just demand. I mean, from growers, from dealers, from brewers, and those two things are related. But the market's going to shift where growers and dealers are feel like they can make a living, and where to where brewers and consumers ultimately want. And we saw that private was developing the characteristics both agronomically and flavor-wise that were demanded. And I hope we're starting to see that swing back with renewed investment. Brewers Association has participated in that, and on the public side and in public breeding, and and thinking about both kind of the agronomic piece and the flavor piece on the public side, which public also has a lot of other benefits for private programs as well as a source of plant material. But I think it's just a combination of that there weren't new varieties coming out of the public side that people wanted to use on the grower dealer and brewer side, and hopefully we're starting to see that trend shift back. And some of the Mark talked about buying a bunch of Tahoma, and we've seen cashmere go up the ranks, and I think with renewed investment on the public side we can continue to see that grow, and I think that would be great.
I'm going to echo kind of the same thing, and it got touched on a little bit yesterday by our presenters. Some of it's marketing. I think there are some viable varieties out there, and some of it was focus and leadership and economic support. Let's be honest, there wasn't We saw a dwindling of some of the USDA funding over the years, and now that we've been able to put some life back into that, some tremendous work by some individuals. I know Chris isn't on the call, but certainly Chris from the BA has been an instrumental piece in this. The Hop Research Council and its leadership position and the work that Brian and Judy have offered. I think it's off life support and now it's down a path of growth. And I think it's important. It isn't enough for, as I said in my talk, for us to be able to step up and say, well, Tahoma and Rainier are very viable and have done great. There's a lot of other brewers out there not using Tahoma and Rainier. And I think some of that's marketing, and maybe it's because we are using it, they don't want to. I'm not sure. But if you don't have viable options that are out there, you got to give reasons to believe. And I think what's happening now with the public program is you're giving people reasons to believe. Some of what's coming soon in the advanced and the elite lines are very exciting. We've got 2 in the elite level and 9 kind of top draft picks in the advanced and more behind it. So it's going to take a while to kind of get that back into vogue. And marketing's still going to be a challenge. It very much is. So, but I think it's on the right path. It's a great question.
Okay. There's one. It's directed at Mark. And once again, these are great for the whole panel. In an industry where many brewers speak antagonistically in the public domain, how do we overcome that to work together in the hop industry?
Great question. Thanks, Matt. I would say really it's 2 words. It's leadership and it's education. I don't want to draw parallels to what's been going on from a political standpoint, but when you've got antagonistic parties that are out there just continuing to expose gaps and pick at each other, nothing really happens when you keep picking at wounds, except you end up with some really bad scars. So I think this meeting, some of the things we've talked about, when you put leaders in the right position to lead, when you put industry people in the right positions to lead within their industry, then good things can come about. I think it's a strong industry, and I think healthy competition is good, but not at the sake of damaging someone else's credibility or process or products. And I think a rising tide floats all boats, kind of a cliched answer, but it's the truth. And I think we have to continue to educate people on the quality of our products, the quality of beer, that beer belongs. And I think it's only through those messages that we're going to continue to start whittling away. You're always going to have the haters. You're always going to have some aspect of it. You have to move past it. And then I think it takes a leadership position to move right past that and focus on the real issue that we face as an industry, like sustainability or like growth or like finding new outlets for hops, et cetera, et cetera.
I'll jump in after Mark and just say too, I think we've seen more industry collaboration in the last few years. I mean, there's still competitors taking shots at each other, but beer industry has worked together on more issues in the last couple of years than I think at any time since I've been involved with the Brewers Association, which is over 7 years now. We did some projects through the Beer Growth Initiative. There's been a lot of work on legislative or other bigger issues related to COVID. So I do think we're seeing more recognition that if we can all raise beer together, that's going to be good for lots of brands, and then we can fight within that to differentiate brands, and that's certainly our tagline too. Differentiate, don't denigrate. Don't take shots at beer, and try to tell why your beer is great, but you don't take shots at other people's beer.
It might be worth comparing some of the big brand fights we've seen in beer are kind of the previous generation of brands, and they're the ones that aren't showing up on the growth leaderboards as much as the new brands that are standing alone. So I do think that from a consumer perspective, there may be a better response to brands that are presenting a much more direct and positive beer image, and so that should be a little hopeful towards what we'll see more of in the future.
Great. So this one, there's a question here that we actually, Jim, you touched on it earlier, but I think we can dig into it a little bit more. And they said, if we're looking at 12 to 18 months, of course, that's the crystal ball. And they're comparing it to now where we have really pushed so aggressively for off-premise consumption. You know, how do we see those on-premise gains coming back? You know, maybe from the Economist standpoint, you know, how do we see the signs of pent-up demand?
Jim, you want to start? Or should,
Yeah, Bart, start with your Economist.
Yeah, sure. I mean, we're gonna see that, you know, a lot of that volume that flowed out flow back in. So, you know, yes, craft is going to lose some of those off-premise gains, but it's going to more than you know, gain them back in the on-premise. And you know, hopefully I kind of illustrated some of this in my presentation. But you know, if we return to a place where craft loses the 10% bump it's gotten in off-premise, but gets back the 50% it's lost in on-premise, that's a good thing for craft, and for overall craft volumes, that will be positive. There may be a few companies that are really off-premise skewed where that's not the case. But you know, I do think we're going to get back mostly there this year. I'm hopeful that we'll get back, you know, maybe not fully, because you know, some of the shifts we talked about and just different consumer patterns, people who are now used to buying, you know, the 6-pack from Drizzly on the app or having food delivered in, you know, may go out a little bit less. But that, you know, as we get to a situation where the public health situation's under control, we have vaccines, that we're going to see that pent up demand, you know, swing back, and that the on-premise by, you know, 2022 is going to look similar to what it did in terms of overall levels. The one caveat I would add is that, you know, the world is always in motion, and the on-premise we return to isn't going to be the same one that we had before. We're already starting to see this in terms of openings and closures of restaurants, that the restaurants that are closing are, you know, fuller service, you know, and the ones that are opening are fast casual, are places that maybe beer and beverage alcohol might be de-emphasized a little bit. So that's going to require new strategies and some differences. But by and large, I think we're going to see that same way we saw, you know, the kind of the tide flow to off-premise, that it's going to flow back because, you know, and Jim, feel free to disagree. I don't think fundamentally we've changed our demand for the way we want to do things as much as we put them on pause and you know, had to change everything because of this pandemic.
Right. Not much would, especially in beer, would lead to greater at-home consumption. Right. In the coffee industry, a lot of people have bought new machinery at home. So you might think, okay, a few more people will drink at home. They literally have a new grinder and coffee machine and new subscription to you know, a specialty coffee, you know, a monthly delivery. In beer, it's not the same. One thing worth thinking about, we've kind of described some of the recovery as a K-shaped recovery in the U.S., right? So wealthier consumers are recovering much faster and much more strong way and right now have disposable income that they don't have a place to spend it, right? There's no travel, no events, less dining out. And those would tend perhaps to be more often the craft beer consumer and the, you know, craft beer on-premise consumer. Those consumers will be absolutely ready to go once things open up. And so I think that'll be a fairly big positive for, you know, a number of kind of more premium options across the beverage world once things open up.
You know, I did think it was interesting in your charts you showed earlier in Europe and the UK, when they reduced restrictions, that number seemed to spike higher than the standard. So that, I mean, that's pent up demand up to like 200%, wasn't it?
The UK, it's worth noting, had a program where they gave like an extra, maybe Bart knows exactly, the extra like 10 pounds basically if you ate out during the week. So there were these wild spikes where they were basically paying people to go out and support restaurants. So you did get bookings well above normal because of government subsidies.
So maybe that's what we need to do in the industry is a lobby for that.
The hospitality industry in the U.S. would be very happy to hear some subsidies to pay people to go out during the week.
Yeah. Okay. The next question, Blake Crosby is asking, any sense of how much craft share seltzer is taking? Seltzer, our favorite.
I'll start with that one and just say, I don't think a ton. You know, I mean, craft share and off premise, and admittedly the numbers are hard to parse fully this year, but, you know, didn't really change this year. You know, And I think, while we have seen growing evidence that craft drinkers and seltzer drinkers overlap more and more and more, that only makes sense as a category grows. I think for many beer drinkers, those are different occasions. And many craft brewers are now offering a seltzer as well. So my sense is so far has not been huge. But that could change as we see the seltzer category grow, differentiate as more seltzers, try to adopt marketing cues or flavor or occasion cues that point toward craft brewers. But, and Jim, if you have, more data on this, jump in. I mean, the numbers vary, but, it seems like about half to 2/3 of the seltzer volume is coming from beer, the rest from either new occasions or other parts of beverage alcohol. And within that, I think most of that is still coming from lager and light lager, that we're seeing, that this is taking occasions that used to be, light lager occasions, and the next generation wants, slightly different attributes, and that they're, substituting seltzer in there. And it's been less about kind of taking occasions from craft. And if it is, it's probably taking some from the lighter end of craft, which is a little bit less developed than fuller flavored.
I think it's right that if seltzer is taking share from light lager, then it would make sense that it's more concentrated in the bigger brands. It's worth saying that I could have included it in my market share concentration chart, but seltzer, the top, it's really top two that's significant there, is still something like 75%, and top 10 is well over 90. So this is a highly concentrated industry, and we, even with all the entrants this year, didn't see that big of a difference. So the current view is maybe this ends up a little bit more like an energy drink category, something that is more concentrated overall. It will be interesting to see what happens when people return to the on-premise, right? So our on-premise didn't have seltzer really, before COVID, and we'll definitely have seltzer after. Certainly, tons of tap rooms, will be featuring their own craft brands seltzer, to see if that kind of breaks, a little bit more towards craft brands than mainstream. But right now, it doesn't seem like craft seltzer is taking a significant part of share.
Yeah, I'll support everything you guys just said. I think it's a lot of our mainstream and core light lagers are going to be more effective, and we're seeing similar numbers to what you guys had shared. So, no real surprises. I mean, it's not a wait and see. It's certainly a observe and participate in our sense too. I mean, it's a 20 to 25 million barrel growing segment as an industry. So you got to pay attention. But we're not seeing the similar stuff. It's just echoing the same sentiments.
Yeah, to shift, I mean, seltzer is a big and growing target. So, I think we pay a lot of attention to it for the beer. But if you look within beverage alcohol, I mean, I think the greater threat to craft volume is for our canned wine, canned cocktails, some of the things that are happening on the wine and spirit side that they much more clearly mirror what craft brewers tried to do in terms of marketing flavor occasion. So those are the ones that also craft brewers are dipping their toes into, I think, equally, if not more than seltzer. So that's another space to watch because, many of the canned cocktails, and, Jim talked about this, that, people don't think necessarily in kind of what's in the can as much as, attribute, functionality. You get a canned cocktail, it's 5 to 8%. It's, in the same thing. It has the same marketing cues. It talks about being an artisanal beverage. I mean, I think that's going to be as much a competitor for craft brewers in coming years as the seltzers. And the large brewers, beverage companies, it's Molson Coors Beverage Company, not beer company, now are investing in that space as well. So that's another one to watch.
Okay, here's a question to Roy Johnson. Is there an opportunity to have a variety hopped seltzers that would help move to this type of beverage? I had the same thinking. A variety hopped seltzer.
I think there's certainly that potential. I think it's foolish to think that we wouldn't want to dabble in that arena and see the attributes that hops can certainly contribute, and the usages that hops can play for different types of flavors and experiences. So I got to believe everybody's that has the bandwidth to do it is looking at this, because it's a resource we already have. It's a knowledge base we've already got. It's a partnership from a supply side that we're already pretty deep in for several hundred years. So yeah, to say that that's not being explored, I think would be a little naive. So yeah.
There are a few people who are doing it too. Go ahead, Jim.
Yeah, hop water, hop tea, right? There are products out there that have this, but they are really small so far. And I think broader consumer acceptance of hop as an additional ingredient outside of the beer world just really has a long way to go to be developed. And it can be, right? Because you start adding it into a couple major brands as an extension, and consumers will catch on really quick, but we're not there yet. So there'd have to be additional, kind of corporate investment in building out that segment.
Yeah, I would agree. I mean, we're seeing some craft brewers do it. So there are craft brewer seltzers that have hops as part of the, often in combination with citrus. We have one here in Colorado that does a tangerine and hop hard seltzer. But I mean, I think the dominant flavors so far have been, berry, tropical, fruit forward. And so the seltzer category has been about light refreshments and bitter, even though, aroma hops don't have to be bitter, but it would take some market building there. So I think there's some opportunities, but it's going to remain a niche and kind of the broader things that you see in flavored water. When you go down the water aisle, it's, look at what, bubbly and LaCroix and, with those flavors, that's where hard seltzer is going to be for the near future. And it's going to take market building before, or flavors like hops that are kind of not traditional to the bubbly water space move into that.
Okay, great. I'm going to go back to a question about the one of the earlier slides we saw, which showed the top consumption growth. I think it said Latina women.
Mm-hmm.
So is there still the thought that women are drinking more wine than beer? Are we seeing any trends in, do you guys still see, beer as mainly a male, especially the IPAs and stuff, as a male product, or is that changing over time?
It's changing. Beer is still male. I don't have the exact breakdowns in front of me in terms of beer for male, female, but overall alcohol actually switched among the youngest legal drinking age to, females are drinking more than males. And so some of that is the overall alcohol switch towards females is just pushing, will drag beer along with it. But then a lot of it is are you coming up with brands that resonate with both genders? And of course, why is hard seltzer so successful? It does. It does in a way that, many of the other beer brands don't, because they've been traditionally marketed, heavily towards males. And so I think a lot of the success with the next generation will come down to finding ways to appeal with new brands to both genders, as well as, the different races successfully.
All right. And then what I just asked generally, what maybe each of you could go around and say, we can do a positive and negative, but what worries you most and what gets you the most excited about this industry? And you don't have to answer both. You could just say what excites you or what.
I'll say I'll start out and I'll just go with what excites me, or one of the things I find the most interesting is the complete blurring of lines between alcohol companies and non-alcohol companies, and even within alcohol, different brewers getting into wine and spirits, and wine companies entering hard seltzer. It's really getting very interesting. And as I kind of talked about, there's a lot of innovation that you're taking from non-alc and taking into alcohol, and it goes the other way too. So one of the things I find most fascinating is kind of how much everything we drink and every sector within beverages is starting to affect every other one. So beer doesn't stand alone as in terms of what drives consumer behavior, but your consumer is being massively influenced by all these other categories, and now the products are starting to all look a little bit alike as well. So I think that's kind of a fun change for everybody.
I'll jump in and say something similar. I mean, the innovation that's going on right now and the possibilities that are allowed in a world where the consumer is open to products that, cut across, traditional boundary lines. I think we're going to see a lot of new and interesting products coming out in the coming years that, that will drive a lot of growth, across beverage alcohol. The thing I'm still most worried about is, I think, on-premise operators, how many, we're not out of this yet, and how many are going to make it through. That's true on the small brewer side. Brew pubs and tap rooms still have a tough 6 months ahead, and we'll see how many make it through. And then more generally, on the retail side, how many on-premise operators are able to survive. And while I'm confident the on-premise will eventually, come back, that could be a big hole for us to dig out of and put a cap on how much, the on-premise recovery can achieve in the next couple of years if we lose a significant number of restaurants and bars.
Similar comments, I guess, maybe a slightly different twist. Certainly from an excitement standpoint, the innovation piece is incredibly exciting. And I think gearing it towards a couple of aspects. It's a mature industry. And I think with it being a mature industry, we have a lot of good decision makers, and that discipline to make decisions combined with innovation coming at them is a very, very powerful thing. You can kind of willy-nilly some stuff with new segments, but there's new beverages coming into a disciplined segment and a lot of innovation being created in that realm. And I think that's very exciting. And ultimately, I think it pushes occasions. And that's the piece that I love to see, the blurring of the boundaries aren't just with the beverage types, but the occasions of where beer and those types of beverages belong. The stereotypes of, if I'm going to go to fine dining and the only thing I can have on the table is a wine glass, we're ripping down those walls every day. And that piece, I think, I find very exciting. From being nervous, certainly as a global brewer, global sensitivities. Obviously with COVID, it's near and dear, but we could say the same thing relative to just looking what happened of who was deemed essential and who wasn't. And we were certainly affected by that because we had a number of countries and operations that were not deemed essential. And that's the stuff that scares me, are the things that are outside of our control that can literally shut you down in a heartbeat and, deal with hundreds of thousands of keg units and no way to process them. And those are the things that, as good as we can prepare, there's always going to be something that pivots you. And when it can happen from nowhere starting in the US, that's very humbling. So that would be what I would echo.
Thanks. Looks like we're just about time. I'll just do a quick one. You can, because I think we've mentioned it a little bit before, but just going on and maybe along innovation, that the 0% alcohol beer. Do you still consider it a really small trend? I mean, a small business, or do you think it's going to take hold?
I think it's going to take hold, and I think one of the things that's going to help it take hold is that you're going to see a line extension from numerous big brands, and we've seen some announcements on this front rolling out into this category as well, right? Because there are a couple startups taking a fair bit of share here, and that's not going to, the big brewers are not going to let that stand. And it just matches with overall greater wellness. And so, trends may not be towards abstaining totally, but a little bit towards moderation. And I think, this kind of fits in with that. Basically, it fits in with consumer trends, and there's all the room in the world for big brewers to accelerate it.
Agreed. And, depends on what you mean by take hold. If you mean gets to the 8 to 10 share it's in, Germany or Spain, maybe not. But is it going to grow for the next, 5 to 10 years? Yes.
Okay. Great, guys. I think we've reached 10:46. So we're at the end of the brewer panel. We'd like to thank all of the panel members here. We'd also like to thank Rabobank for agri-finance for being on this platform's schedule, and especially also we want to thank F&B Farms for your sponsorship of this panel. We have a 15-minute break, and we'll be back at 11 o'clock Pacific time, because I realize we are all on different times, and just ask Jackie, if you're there, if there's anything you wanted to cover before we left.
Yes, thanks, David. Just a reminder that while our next speakers are getting ready to head over to AmericanHopConvention.org, and again, check out a new sponsor in the virtual trade show. So the link is just over in the chat for people to check out.
All right. Thanks, everyone.